I am Manas. Today I am going to speak about the budget. So before we start, just remember, for any questions, let me know in the comment section below and I will talk to you there. So first of all, what is the budget? In simple, budget is a document which contains estimates of the government revenue and expenditure for the coming year. According to the Indian Constitution, budget means the annual financial statement containing an estimate of all anticipated revenue and expenditure of the government for the coming financial year, which runs from 1st April to 31st March. Next, features of a budget. So main features are: number one, government budget is a statement that shows estimated receipts and estimated expenditure during a fiscal year. Number two, budget shows estimates of government receipts and expenditure during fixed period of 1 year, which runs from 1st April to 31st March. And the last, budget requires the approval by the Parliament. Next, components of the government budget. Budget has two broad components. Number one, revenue budget, and number two, capital budget. Revenue budget includes revenue receipts and revenue expenditure of the government, and the capital budget includes capital receipts and capital expenditure of the government. Revenue receipts and revenue expenditure of the government are shown in the revenue account, and the capital receipts and the capital expenditure of the government are shown in the capital account. So next, the revenue account. Revenue budget shows the current receipts of the government and the expenditure that can be made from these receipts. Revenue receipts refers to those receipts of the government which neither create a liability nor lead to reduction in assets. For example, revenue from taxes. Revenue receipts are divided into tax revenue and non-tax revenue. Tax revenue also divided into direct tax and indirect tax. Direct taxes are those taxes whose burden cannot be shifted onto others, for example, income tax. And indirect taxes are those taxes whose burden can be shifted, for example, sales tax. Next, non-tax revenue. Non-tax revenue of the government includes receipts from sources other than tax. Like tax revenue, non-tax revenue does not create a liability for the government. For example, interest and dividend on government investment. Administrative revenue, for example, fees, school fees, college fees, license fees, registration fees, fines, etc. Next, revenue expenditure. Revenue expenditure refers to those expenditure of the government which do not result in creation of physical or financial assets. It relates to those expenses incurred for the normal functioning of the government departments and the provision of various services. Interest payment on debt incurred by the government and grants given to the state government. Revenue expenditure is classified into planned expenditure and non-planned expenditure. So planned expenditure relates to central plan and central assistance for state and union territory plans. And non-planned expenditure is the estimated expenditure provided in the budget for spending on routine functions of the government during the year. It includes all expenditure other than planned expenditure. So the main item of non-planned expenditure are police, judiciary, defense services, salary and pensions, interest payment, subsidy, etc. So next, the capital account. Okay. So in my next video, I will discuss about the capital account. So just remember, what is the budget? So finally, budget is a document which contains estimates of the government revenue and expenditure for the coming year. So I hope you enjoyed this lesson. Remember to subscribe to this channel, and I will see you in the next video. Thank you.